Hello, everyone. Welcome to the On-Chain India podcast. Today we have Pawan with us from P2P. P2P is an amazing product loved by lot of crypto enthusiast people, and we will dive deep into the P2P's journey and the recent things that I've accomplished. Welcome to this podcast.
Thank you so much, Pratik, for having me here today. Really excited to have a conversation about what product we're building and all the cool stuff that we've been cooking behind the scenes.
Awesome.
Yeah.
So Pawan, let's kickstart in about how do you define P2P and what the broader vision of the entire product plays around.
All right. I think before I jump straight into how we define P2P, I think it's very important for us to set the context here, right? Like, how did P2P.me even came about? So, the core contributors initially were working on a social proof layer, and they were looking for like real life use cases, products that could be used by people in real life. And one of the core contributors were looking to on ramp some money onto Binance P2P. And while they were doing it, their account got frozen, right? And that's when the idea of P2P.me came about, because the irony of the decentralized ecosystem that we end up using is that oftentimes we are heavily reliant upon these centralized intermediaries like your crypto exchanges to sort of access this decentralized world. Why is it that we don't have a product end to end which is fully decentralized, where the custody of the funds remain with the users and also acts as a gateway to the rest of the decentralized ecosystem, DeFi ecosystem, so to speak? And that's how the whole idea of P2P.me came about. And to simply put, our proposition to the world, to the globe, is we are a fully decentralized on-off ramp, a payments ecosystem, and you can spend your crypto directly using an application.
So Pawan, how is the product revamped? You mentioned that the contributors felt the problem themselves
Yeah.
with their accounts being frozen, and considering like India is one of the most active nations in the Web3.
Hmm.
Like people to transact on chain is essentially a difficult part. How was that journey where they initially thought hey, this is like a real problem, let
Hmm.
us work on it, acquiring first few customers, and then
Hmm.
eventually now rolling out to everyone around.
Hmm. So unfortunately, I wasn't a part of that very exciting journey where they were putting the product out, testing the product out, and onboarding the first few initial customers. But I've heard stories from the core contributors. We often talk about it. So when the product was put out, it was basically a hackathon project. Honestly, like we put it out there, we won the hackathon, only to realize that there is an actual use case here, wherein a lot of people in India, like you mentioned, like India has one of the biggest Web3 use case users and user base in the world. And all of us are almost acutely aware of like the issues when it faces a users when it comes to on ramping and off ramping. Oftentimes most people get their accounts frozen. Even today I get so many calls from so many people asking me about how to unfreeze their bank accounts, right? This is a very unique problem to the Indian ecosystem, right? So this problem existed, and naturally when we put the product out there, people started looking out for products that could help them securely on ramp, off ramp in a private trusted manner, without having to go through the hassle of getting their accounts frozen, or like having to trust some random person on the internet on Telegram channels. Because oftentimes what ends up happening is crypto native users, to sidestep these centralized intermediaries, centralized exchanges, they end up undertaking these on off ramps, like transactions via the P2P network that they have, which is their friends and family. And if there is no first degree network, then they rely on the second degree network of friends, right? So the bottom line is, like, unless there is any kind of social proof, the whole process of on ramping, off ramping, converting crypto to fiat or fiat to crypto is quite anxious, quite an anxious journey for a user, right? So when we put the product out there in the market, we realized how people found us and how they started downloading the application and started using it. And then we started getting the initial customer review as to how seamless the whole transaction is, how it is easy to use the product, how they don't have to worry about the whole trust factor. Because in P2P transactions, traditionally, you don't know, once you transfer the money, you don't know how long it could take. And maybe sometimes the money doesn't even hit your account. And oftentimes you don't even end up knowing the third party that with whom you end up transacting here, right? So interestingly enough, when we were looking at the metrics, the number of downloads on the App Store, uh, one third of it was from India, one third of it was from Nigeria, and the other third was from like Southeast Asian markets, right? So we realized that there is a huge hole here which could be filled by P2P's existence, because it's an actual problem that we're looking to solve here.
uh, I think very fair and sort of transparent things. What you really said. Uh, Along, and so when you're defining the geographics, Pawan, right? I think rightly as you mentioned, ki, one third of it's primarily coming from India, Africa, and then Southeast Asia. There are like a different set of laws into all of these emerging economies. When we get
Hmm.
oiled into. So
Correct.
at a protocol level, how does like P2P ensures that first of all, users get their money on off ramped, and
Hmm.
B, the local compliances are solved, or they
Hmm.
don't get into much more hassle of
Hmm.
doing it. How does that process happens?
I'm glad you asked me this question, because oftentimes I've noticed with Web3 companies is that legal is the last thing that they care about, right? But oftentimes what happens when you're interacting with traditional payment rails or traditionally so-called regulated aspects of like finance, right? At that touch point, even if you're in crypto, you would be regulated. The government would like to regulate you, right? And especially when it comes to conversion of fiat to crypto, crypto to fiat. So I think uh, we at P2P, we take our legal compliances like very seriously here, right? Um, like be it from our product to like general or overall compliance of our company, and like overall compliance of the protocol, end to end, we try to make sure that we are compliant to the highest possible standard that there is, right? And the highest possible standard that there is, especially for a protocol, would be like your global guidelines, right? Like the biggest issue when it comes to crypto, at least from an India perspective, is money laundering and like counter terrorist financing, issues relating to that. So at a global level, we have something called a financial action task force, which basically draws guidelines for how crypto transactions should be governed. What is the difference between a protocol and a regular centralized company? It makes a distinction between companies which are wallets which are like self-custodial and wallets which are not self-custodial, which are sufficiently decentralized and which are not decentralized, right? So I would like to draw a very clear distinction between P2P's operations and any other centralized exchange operation here. There are two main factors that differentiates us from the rest of the centralized exchanges here. That A, we are a fully decentralized protocol. We operate at a protocol level. There is absolutely no custody of user funds at any given point of time. And B, we absolutely have no data. All the data, that all the transactions that happen, they're freely and readily available for anybody to view, verify on the blockchain, on the block explorer, right? So that distinguishes us from the rest of the centralized exchanges. And therefore, the application of law would also be very different to us compared to, say, other centralized exchanges, right? However, having said that, we understand that a protocol is a self-executing software and there is not much you could do. At a protocol level itself, the core contributors were conscious enough to ensure that at the end of the day, the product should not be misused, right? We don't want a situation wherein a tornado cash happens and like it is used by bad actors at a large scale to launder money. We don't want a situation like that. Therefore, very consciously, while building the protocol itself, we ensured that there are certain limitations within which a user can basically use that application, right? We put in something called a transaction limit. Basically, a user cannot come to my platform and start on off ramping unlimited number of times. There is a limit on the number of transactions that a user can undertake. There is also something called a reputation point, right? My application is not readily available for anybody to use. They'll have to download the application and verify their identity at some level using ZK proofs, obviously, or some kind of a social proof of their LinkedIn, Instagram, using ZK again, and verify that they're an actual human being. And once they verify, they get something called a reputation score, basis which they will be able to transact the amount of money. So currently, assuming that a user achieves like a full reputation score that I allow on my platform, maximum amount at any given point of time that they can transact on my platform is $500, right? And a daily limit of 10 transactions a day. Now, coming back to the question that you'd asked me, how do I ensure compliance at a global level, given like the protocol can be accessed by anybody, used by anybody across the globe, given the fact that I'm also expanding to different countries at this point of time? I think, like I said, in the product itself, while we were building, we ensured that we comply with like the broader guidelines on money laundering and counter terrorist financing, right? The fact that we've incorporated transaction limits and maximum amount of money that one could on ramp, off ramp, or say use my platform to make payments using a QR code is itself like ensuring that it does not violate certain principles here, right? Because it makes it increasingly very difficult for any bad actor to use my platform for like illegal activities, because it adds layer of friction, right? Like a bad actor won't be using my platform to off ramp $500. They would want to off ramp more than, like, you know how the hacks work in the crypto ecosystem, right? So it adds a level of friction. But however, having said that, I understand that no system is foolproof. We are not running a Carnot's engine here, which is 100% efficient. We understand that there are inherent fallacies within the system, which we are constantly working upon as well as we speak.
Right. So Pawan, just continuing on what previously you said, I think the it's a decentralized protocol where I think any given user who is interested in on off ramping the crypto to the local currencies should be fulfilled. But in your journey, have you encountered any bad actors? Probably someone more from like a buying side who
Hmm.
has unknowingly or knowingly declared this, okay, I've transferred this transaction, and then the user complains, hey, this not happened. So
Hmm.
how
Hmm.
does the dispute level at that function goes on? Because for a product to be successful, I think that scale in which the problem get resolved is also much more of an errand. And what's your learning? Obviously the product's going to get evolved over a period
Hmm.
of time, but how efficient is the team handling the new features and the new problems or issues that comes with it?
Yeah. I think, Pratik, if I were to fundamentally like tell you one thing basis which the product is possible today, it is the use of ZK technology and the mechanisms that we've incorporated onto our platform at the protocol level. That is ZK uh, proof-enabled dispute resolution mechanism, right? It is a feature that isn't talked about much about a product, because oftentimes we're just awed by the fact that can I go to any QR and just scan the QR, and are you telling me that under less than 1 minute I can just make a crypto transaction? Like, you're telling me that I don't have to off ramp my money to my bank account and then use my UPI to make payments? I mean, that's a feature that everybody talks about. But the feature which is the most important for the existence of the product is actually ZK enabled like dispute resolution, right? Like you mentioned, I mean, when it is a peer-to-peer transaction, the biggest problem is that of trust. How do I trust the other person would make the payments here? Because I am just an intermediary platform at the end of the day. I provide you a platform where match buyers to sellers and sellers to buyers. My job is just that, and everything else is between the two parties who engage with one another. Now, what happens when one party refuses to fulfill their part of the obligation, so to speak, right? So that is where the ZK technology enters, right? Now, what if there is, assuming there is a dispute, you and I, we are transacting, and then you don't fulfill the order from your end, and you mark it as order fulfilled on the application. What I could do is I could raise a dispute within the platform itself. The platform would ask me to submit some proofs of my bank account or the crypto transaction that I've done. The platform will read it in a secure private manner without revealing the data to anybody else, and would verify at that point of time whether the transaction has actually been fulfilled or not. If it's a no, then the transaction would be either reversed or will not take place. The protocol will not release the crypto fund. So here's one thing that I would like to draw your attention to, right? Like, P2P as a platform is a solely crypto platform. All the traditional financial rail related payments are happening outside of my platform. But I provide a third layer to it, which is, once the transaction has happened outside of my platform, you can come back to my platform and verify whether the transaction has happened or not. That is where we step in with the help of ZK proofs. And if there is any dispute between any two users, they can use the ZK dispute resolution mechanism to resolve the disputes. And so far, we've seen that people inherently don't end up like raising frivolous disputes unless it's a genuine one. And even if there are frivolous disputes, they are only because the user doesn't fully understand what's going on or has been mistaken. So we've seen very low instances of bad actors, and it's very interesting case study as well. When there are people who are securely and privately transacting with one another, they would want to uh, uphold the goodness within themselves as much as possible, if that makes sense, which is quite a unique feature, quite a unique insight as well into the whole product, I'd say.
Yeah, I'm hearing like, amazing feedback on the product from, a lot of folks that I know who are, transacting on P2P.
Thank you.
And I think, this is like, going to scale enormously, from what I feel. And I think you guys are like rightly placed on handling the disputes and, efficiently scaling it to a point where the user, should not feel the burden, right? I mean, he just
Yeah.
comes in, if he has a reputation score, he
Yeah.
transacts it, and he's a good actor, he just moves ahead, right? Should
True.
be as simple as that possible, which is coming in. Moving on, to, tons of other questions where, I think specifically given the founder scenario in India, and I specifically wanted to pick this question as,
Hmm.
uh, I think, from a legal standpoint, while traditionally it looks on a surface level that, there is, you guys are not holding anything. It's just
Hmm.
like a decentralized platform where two parties are exchanging. But, in the deep of it, I'm pretty sure there are a lot of legal things, which are taken care, or, compliance has been, sorted in that manner. Now,
Hmm.
founders, consider like a early stage developer who really has this amazing stable coin idea, or, something on the payments, sort of an idea. And
Yeah.
given the scenarios, I think majority of the countries, across the world where the regulations are not so friendly, right?
Hmm.
So what would be your advice to such founders, who have a fantastic idea but are feared that, hey, what's the use? I'm anyways going to kicked out, or, someone's gonna, file like a legal case, or something, will happen
Yeah.
towards it.
Yeah.
Because this will be like an inspirational, story for such founders as well,
Absolutely. Yeah.
considering what your guys' journey has been.
Yeah. Interesting question, Pratik. I think I'd say number one, just prioritize at the product stage itself. Integrate, like bring in people on board who understand the law, and while building the product out, ensure that your product is as compliant as possible at the offering stage itself. Don't it should law legal shouldn't be an afterthought. You know, like the problem is when it becomes an afterthought, you already have a product which has been launched, which may be violating a lot of laws, and then you think of it as a afterthought, and at that point of time it may be too late because you've already put in the effort, you've already put in your time, you've already spent your investors money, and oftentimes what ends up happening is that you're already in deep trouble, right? So the best way to go forward for anybody, especially working in the payments ecosystem, is to realize that there isn't absolute clarity, especially from an Indian perspective, as to where the law stands vis-a-vis crypto, right? Because we don't identify crypto as a security, be a commodity. We don't have any crypto specific laws in India. There is only one Supreme Court judgment wherein the Supreme Court said that crypto per se is not illegal, or transacting in crypto is not illegal. Anybody can trade in crypto. Um, Having said that, there are multi-billion dollar exchanges operating in India, right? There are also multi-billion dollar exchanges which have lost millions of money, millions of user funds, right? And still operating in India. So those are like all facts here, right? So the only point of law as of today that we have is something called a Prevention of Money Laundering Act, which essentially places similar obligations on intermediaries, crypto exchanges, or anybody operating in the virtual asset space, similar obligations as that of a bank or as that of a non-banking financial institution, right? What it essentially means is that you would have to undertake similar reporting obligations as that of a bank. It doesn't matter what you're doing, how big your company is or how small your company is. If you are a virtual asset service provider in India, and if you're a founder in the space and you have users, you have to undertake reporting obligations as per the law. Now, now I understand for an early stage founder, this could quite this is quite overwhelming, and it could be quite cumbersome for them to even like find and identify how to go about it. Um, but honestly, like it all comes down to one thing, right? Like having like good voice in your ears who basically tells you how to go about your product offering, how to build your product in a way wherein you'll have to undertake uh, as less compliance as possible, right? Because let's just talk about like p2p.me here or other protocol that we're building, right? Globally, we are seeing that before the Trump administration had taken over again, uh, Uniswap was being sued, Coinbase was being sued, like all these protocols were being sued. Tornado Cash's founder was put behind bars. And the argument at the academic circles remained the same, which is you can't really like call software code illegal. Like, how is it even possible? Are you telling me building software today is illegal? A protocol which self executes and self operates is illegal just because people can use the internet for like bad activities, or bad actors can leverage internet to commit some kind of a crime? Does it make the underlying protocol which enables internet related activities illegal? Those are the fundamental questions that we are asking, right? And obviously, given how new the technology is, law will always play catch up with the technological development here. And that is the same case that we are seeing in India as well. Um, we are absolutely clear about how centralized exchanges or virtual asset service providers who hold custody of user funds, who have central servers where they hold data, are to be treated in the Indian context. However, we have absolutely no clue how a pump.fun or a Uniswap or any of the protocols or Ethereum for that matter should be treated in India vis-a-vis Indian laws, right? Like, where does it really stand? So that is the gray area that I see a lot of opportunities in as well, and that is the gray area that I see a lot of founders are scared to enter as well, right? But having said that, I feel like there are good judgments coming out of US. Recent actions of the US administration has also sort of cleared the path for the rest of us to see that, okay, decentralized products are to be viewed differently, and there is a reason for that. Because like I just mentioned, right, you can't, just because somebody can use the internet to commit, say, a crime, you can't declare like the protocol itself to be illegal, right? So it has to be treated differently, and it would take a bit of time for us to explain it to the regulators, for the regulators to get their head around it, wrap their head around and understand, like, okay, what is it that these guys are really doing? But from a regulatory perspective also, I do understand where they are coming from, because there is a risk of flight of capital which crypto facilitates. And the easier it gets for anybody to sort of convert their, say, fiat to crypto, the easier the flight of capital as well, right? Which intrinsically ties back to Indian economy and like a lot of other regulations that India has.
Amazing. I think these insights are like pretty good, and I'm pretty sure founders who are building in this space would also get motivated. And I mean, it's a clear path. Like, you follow compliance from day one, and I think you'll be good. Obviously,
Yeah,
a lot of people might attack, but it's always good to stay in the lane and
yeah,
be as much as legally compliant as possible. Just writing a piece of code. Yeah. Coming to the, in interest of time, Pawan, I think coming to a couple of questions more. I think P2P has an amazing fundraise journey.
yeah,
You guys recently announced PR, for the for your first round, and we've seen like some tier one VCs, backing you about. Uh,
yeah.
just quickly, how was the conversations with them? And pretty sure
Mm,
since this is like a bigger problem, what
mm,
was that big vision, that you guys pitched in,
yeah.
ensure this fundraise was successful?
Yeah. I think I would like to divide this in. Our journey could be divided into two phases right here: before alliance and post alliance. Like before alliance, although everybody understood the product, like the product is offering something very unique, it has a lot of potential, but everybody was scared of, okay, so what about the compliance? What about the law? How do we go about it? Right? Post alliance, the journey has been completely opposite of that. Right? Post alliance, like we understand in the Web3 ecosystem, at least, like a lot of the products and technology that we end up building are not really regulated, and they are always on the edge, right? They're always pushing the laws, they're always pushing the regulators. Post alliance, I think, before alliance it was very difficult for us to raise any kind of funding because people were like skeptical, although they understood the product, they love the product, especially Indian VCs. Post alliance, I think the conversation completely moved because they realized that this product is very unique and something that we need. Because at the end of the day, if you have your crypto, and if you're not able to spend that crypto without having to sort of take that crypto via a centralized intermediary or an exchange, then off ramp it to your bank account, what point, what's the point of crypto in the first place if it can't be used for payments, right? You have all of this infrastructure which is built out, like you have your blockchains, you have your protocols, you have your USDC which is built out, but there isn't like a last mile delivery service provider, if that makes sense, until P2P.me came into picture, right? Now you have like the whole infrastructure where there is blockchain enabled stable coins, and those stable coins can be topped up on my platform, topped up on a wallet which is integrated with my platform, and then you can, technically speaking, just like spend that crypto within my platform, right, using my platform. So I think a lot of VCs were really excited about like the whole stablecoin adoption bit. They understood that this is what is missing from the whole puzzle, if that makes sense. Like I said in the beginning, right? Like we all have adopted the decentralized ethos, yet The irony is that we rely on these centralized intermediaries, and now we have a decentralized product which eliminates the need for a centralized intermediary altogether. So when we were having conversations with the VCs who were interested to invest in, it was honestly like it was up to us. Like we had to pick between the folks that we wanted to work with, right? Like we wanted to see who are the ones who are willing to support us through our vision end to end, right? And and be quite fearless about like executing our vision. So the conversation was like fairly straightforward. Like they were interested about the product. We told them about the product offering. They were excited about the USDC, like stablecoin adoption, and like being able to spend that stablecoin in a decentralized manner. And yeah, so it was pretty cool actually. There's nothing more to that.
Nice, yeah. And I mean, definitely everyone's rooting, for you guys to
Yeah.
have like an amazing, couple of next quarters. And then whatever is in the roadmap, hopefully you guys raise like a much larger capital, to
Mhm.
ensure the protocol is much bigger, probably in more countries and, stuff
Yeah.
like that. Yeah.
Yeah.
So hopefully on that. Yeah.
Yeah, we're expanding to Southeast Asia, LATAM. We are a global protocol at the end of the day, and we want to be accessible globally speaking. We're going to expand. We're expanding to like several countries parallelly here at this point.
Awesome. Yeah.
Yeah.
One last question, Pawan. What's the big vision for P2P in 2025, right? I mean, you can be as frank as, speaking about numbers,
Hmm.
transactions, or, the kind of countries that you expand to. I understand this is like a foundational layer that you
Yeah.
guys want to build, but, what's the internal goals that you guys are, thriving to achieve?
Okay. Um, in an abstract form, we want to become the gateway to the decentralized ecosystem that blockchain offers. Uh, in terms of numbers, we want to service the 1 billion people in India and get them on board onto crypto and use stable coins. That's the immediate goal. And eventually like also become a globally used protocol for like all stable coins related payments across the globe. That's the vision.
Awesome. Hopefully, waiting for that announcement where you announced your millionth, customer,
Yeah,
and contributing, to this decentralized, world of applications.
absolutely.
Thanks, Pawan. It was amazing to have you on this podcast. I mean, there are tons of other questions that's coming, but hopefully we'll do another series
Absolutely.
of this. But I think, we wish P to be the, greatest of this 2025, and hopefully you get more customers onboarded. More people are able to come to this on-chain world rather than just sticking to the centralized way of, buy and sell. I think that's the greatest power that you guys are
Mm.
providing, and
Yeah.
hopefully you guys become big. Yeah,
Thank you. Thank you, Pratik.
awesome.